Welcome to my channel Options Trader Today. So today in this video I will tell you how the price of gold has moved in the last week and how the price of gold can move in the next 2012 to 2022. Okay, 2020, that is around 8 years we have seen a U pattern is forming, and if you calculate it otherwise we can see a downtrend, a range bound, and then again an uptrend. In this 8 years we have seen a quite volatile market in the price of gold. Okay, now same pattern what we have seen in this particular range, a U pattern, a downtrend, a range bound, and an uptrend. Okay, if you look at closely you can see, you will understand this, a downtrend, a range bound, and an uptrend. Okay, now what we can see looking at the chart. So suppose before that, if you have any doubt regarding gold or any other commodities, even forex, you can mail me at stockmarkettradinglive@gmail.com or a mail ID I have given in the description. Please watch the full video, then you will understand how this technical in gold is working. And if you wish to join my Telegram channel, link I have given in the description, you can join. Okay, now suppose if the price of this particular level sustain. Okay, so suppose if the price of gold sustain, what we can see? We can see it can touch a level of 19. Suppose if the price sustain this particular level, we can see it can touch a level of 1814, and suppose from there if that level sustain, then we can see it can move further upside towards a level of 1828, and from there we can see it can touch a level of 1835, and 1835 is a strong resistance. That means, and already being weakened a resistance, so probability will be high. We can see it can go further upside towards a level of 1856. Okay, 53, and from there what we can see, it can, if that level sustain, that means if it sustain above a level of 1853, then we can see it can touch a level of 1870, and from there we can see it can touch a level of 1877. Okay, once the price goes above this level, then we can see it can go further upside to a level of 1907, and from there, and this 1907 is already being tested here, so probability will be high. We can see it can go further upside towards a level of 1932. I am not going beyond this because so much of volatility in the gold on the upper side. If it goes, I will make a new video. See, suppose if the price sustain this, if the price didn't sustain this particular level, what we can see, suppose if the price didn't sustain this particular level, we can see it can touch a level of 1800.85, 18.85. okay, suppose if the price goes below this level, then we can see it can touch a level of 1798. okay, and from there if that level also didn't sustain, then we can see it can touch a level of 1789, and from there we can see it can touch a level of 1780. Suppose if the price goes below this level, then we can see it can move further low towards a level of 1763, and from there we can see a level of 1756. Suppose if the price goes below this level, then we can see it can touch a level of 1745. okay, and once the price goes below this level, then we can see it can move further down to a level of 1722. If this support breaks downside, we can see it can move to a level of 1754, and from there we can see it can go further down towards a level of 1745. okay, because what you have to understand here, look at here, that if it goes below a level of 1745, then we can see, because this is again a very strong support, if it goes below this level, then we can see it can move further down to a level of 1722. okay, and once the price comes close to this particular level, we can see a further downside. okay, if it goes below a level of 1722, I will again make a new video, and then you will update you with the price of the gold. So now understand something, if you are trading and investing, please consult your financial advisor before investing. But suppose if you are trading, most of the traders lose money in the market. okay, and what I teach in my workshop regarding trading, see, suppose you are trading with $10,000, suppose try to trade with 10 to 15% of your capital per trade. That means around 1000 to 1500. okay, so, and risk should be 0.5 to 1%, that is around $50 to $100. Get this in mind. okay, suppose if you are trading 5 trades a day, and all of these lose, that means $500 is your risk. okay, $500 is your risk. So suppose if the price, if that particular $500 lose, you will not be, you can exit the trade for the day, and then for the next day what you can do, you will not be focusing more on profit, you will not be focusing more on the losses, rather than you will focus more on profit. okay, suppose if you lose all 5 trades, then you will not be focusing more on suppose chop nani pa chop. So suppose if you trade 5 times, arey yaar. Suppose if you lose 5 times, if you all trades went wrong, and maximum risk you will it be around $500. Okay, so what you can do is the next day you will focus more on profit rather than recovering this particular loss. So this is what most of the traders do. Okay, that they try to recover the loss, which in turn reduce their capital, and where they lose their full capital. Okay, this is what I teach in my workshop. If you want to attend my workshop, you can mail me regarding this, and then we can work out on the timings. Okay, so hope you like the video, and if you like the video, please give a thumbs up, and if you are new to my channel, please subscribe it. Thank you.